1 second here. I just gotta turn my Google thing off. Okay. And that music still playing. I forgot to turn it off before I started this. So here's the risk disclaimer. Read that over. And I'm gonna pull that off. So, welcome back to another insightful takeaway from a student. I call myself a student of the marketplace, and I probably always will be. But I'm an ICT student, and I'm just sharing my discoveries and my anticipation of price through my eyeballs and what I've learned. So I specifically want to throw the idea of a breakaway gap out there, and I want to show you my takeaway on why a certain gap may not fill in. It doesn't mean that it's not going to fill in ever. It just means that right now our objectives are higher and it's trying to get somewhere. So overall, that gap that I have annotated here has a possibility of staying open. I'm going to change this to the bottom. That way you can see the lines. Top. Really only need to put the word there, but whatever. So from a monthly chart, real quick, you can obviously see that from this price leg low to this price leg high, we had a shift in market structure below this low, and that was an indication that you could be seeing this market reprice below equilibrium and reach a discount array that is below equilibrium. But real quick, so shift in market structure, institutional order flow, entry Joe right here, small little stab into that fair value gap, and then obviously you offload at sell side below this low, and potentially, if you trust that we're getting down in here, which I personally cannot do that myself because it takes, I don't know, it just takes a lot of patience and a lot of like really keen bias that is just above my pay grade, and there's no way I could do that. Maybe one day, but like I would have like very little leverage on it, and I just would not want to do it with the high leverage. So this low, and then obviously things change too along the way. So this could have easily just not even came down here. You could have found support up here, or could have found support at these down close candles, but obviously that didn't happen. So as you can see here, we reached below equilibrium of this price leg up, traded into a fair value gap. One thing I wanted to annotate before I move on. Bodies, look at them all. Look at all the bodies here. All of them are staying above the fair value gap. Also note the consequent encroachment. See how they're just tapping it. All of them are staying above it. That's bullish. And right in here is where you want to look for a PD array to form. So you have one PD array that has formed already that you're kind of expecting. I just noticed this right now, so I'm only pointing it out. But you have the inversion fair value gap right here. How do you know that's going to be an inversion? Well, it has to go up, trade up past it. It has to violate it. Technically, this is a short entry to target more sell side. But if you're not expecting it to go lower than this, then you're going to look at this and see if it acts as an inversion. So that's one thing that sticks out to me here. And then you have a bullish order block. So this last down close candle right here, that is your order block. Obviously, it's not like picture perfect where you get fair value gap, comes down, touches it or anything, but when it trades up past it, it essentially gets utilized to send price higher. So that was clue number 2, other than this inversion. And then this was clue number 2. Obviously, if it's going to trade up past this, it's probably more likely to use this as an inversion. So that's actually something I'm going to study later on after this, just because I'm kind of interested to see how this panned out with the levels and everything. But so we have the order block, goes up past it, inversion fair value gap, but you have the respect of the fair value gap, that's bullish, especially with consequent encroachment, and it closes above it. So you have a couple of things lining up, and if you're an inversion trader, then I guess you could utilize this to target this high, consequent encroachment of this high, rejection block here, opening price on this candle. Technically it's a propulsion block because it trades into an order block. I personally wouldn't really like that because I'm more of a person that is bullish on the indices longer term, and price action in general has showed that during this time frame that it was not gonna respect this. It was just a target because you're looking for inefficiencies to be filled in. So this for the long term. Would I have been able to do this? No, I don't have the patience for that. So ultimately, that was just another thing that drove us higher. So let's get into the breakaway gap because I'm going off a topic. I just wanted to explain that. So I personally am classifying this as a breakaway gap because I see this monthly inversion fair value gap. So we've essentially, on this run up here, we repriced into the high of it, and it eventually it just left it and treated it as a balanced price range. So when it comes up through it and closes above it, sorry if you hear my dog whining. So if we see it close above it, which it didn't here, actually closed. This candle closed just a hair above it. So that's obviously not a closure, but you're anticipating that it's going to close above it. So when it comes back down, if it ever does come back down, you're looking for it to act as an inversion fair value gap. Now, the reason why I'm saying that this is a breakaway gap is because of what I just explained right here. It's not going to go up unless you have something that you're not seeing over here that's not over here. Then maybe I would see it possibly come back and roll over below it. But because we have this here and all the other markets are just predisposed to go higher, I would not look at this and be like, okay, well, now it's just going to go right back below it. Take this high out and then go right back below. And I wouldn't expect that. I would look. Now, this obviously this couldn't have happened. I mean, this may not have been a thing, but because it did happen, it came back down, retested it as an inversion fair value gap. So it was basically like a how do I put this? A market maker buy model that could potentially be unfolding. That's why I personally am seeing this as a breakaway gap, because this is like a floor. It's like a roadblock in the road. It's got to, first of all, it's got to get through consequent encroachment. it can go down into it, but you want to see immediate reaction if it does hit it. So in this case, it went down into the premium of the monthly inversion fair value gap, because I do believe that when you're expecting continuation, that, I think I said that wrong. So this would be the discount, I believe. So you're trying to buy at a discount, so discount and premium. So this is discount and premium below. I probably said that wrong. That's super confusing to me, but I believe that the levels are flipped when you're expecting continuation. So I'm not going to get into that. It doesn't really matter, but you just ultimately just want to see consequent encroachment not traded to, or preferably you want to see a close above that. And you can see that happening here. Now, that doesn't mean it couldn't do that. That doesn't mean that it may not do that in the future. It's just something that, did happen. And I understand that it's hindsight, but after studying the chart, looking at this, and I was like, this probably is going to stay open, because this is a roadblock. It's got to get through this to get to this. If it can't get through this, then this can't be reached. But if it can get through this and close below it, then it can get to this. So that is my theory on it, and that is what I believe. And then obviously it turns around and hits the monthly volume imbalance too. So monthly chart, that is all I seen. And it's interesting how it reacted here at this premium array, the volume imbalance. And then next month we open up, trade down into it, and then come right back up. So I personally have said in other videos that I was expecting it to go below this low. But man, with ES printing such a smooth, flat top, literally it's just a flat line of relatively equal highs, just smooth like the rectangle top. So that just made me question, is this really going to turn around and go below this low? Because that smooth edge is, I know it's going to be made jagged, like ICT says all the time. So that's another reason why I was thinking that this may act as a breakaway gap. Now, the nice, unique thing about this particular formation and price is that if you take the dealing range from this low to this high, equilibrium, right here, you can see it, 1654625. We went below it, and we also dug deeper, which is really, really unique, is that we're tapping into that monthly fair value gap, the inversion fair value gap, and look at all the bodies respecting that on a daily time frame. That is just that's super precise. And then obviously if we go into a weekly, I did skip over the weekly chart, so go on a weekly and look at how close it came in to closing this. It just fell short of closing that in. So that's another reason why you don't want to be aiming for the low, like ICT says all the time. You don't want to aim for that. You want to come off of that a little bit, and look into the daily time frame as well. And another interesting thing about this whole monthly inversion fair value gap is that we have this old high, and that's the intent. That's one of those instances where support broken right here, or not support, resistance broken is now support, works. That's why that works here, because of the inversion. And then you also have you have a little bit of a weekly busy here, but no, you don't have anything else. Okay, I thought I saw something. So that's why this works right here. It's because of this inversion fair value gap. If this wasn't here, and this old high, or, well, obviously if this old high was here, I would not look at this as support broken, now it's, or I keep saying that wrong, resistance broken, now it's support. That's no, I wouldn't look at it this like, because if you look at it like that, it's more prone to fail. Same thing right here. You have this inversion, goes through it, fair value gap comes down. It could have acted as support right here, where an old high broken, now it's support. But obviously you don't have that. So, other than that, there's nothing really else on the weekly chart. But obviously I have to show you that because I found that unique. You also have, do you have, no, you don't have that. Thinking breaker, S&P has it. There's really no order block there. So that's the only couple of things that I've seen in this price action that I found unique, and why, in my opinion, I think we're traveling higher for that reason. So equilibrium has been traded to here. Then we go one step further and we break down the PD array matrix into a daily. So we have a buy side imbalance, sell side inefficiency right here with these two candles. I know you're probably wondering why not pick that one, or why not pick that one. Well, this one is above equilibrium. This one is right above a higher time frame level. So to me, it does not surprise me that we went down into this one. Because that is one of the questions I've always asked, is which fair value gap is going to be the one that it turns on? Because I originally would think, okay, it's probably going to be this one because it's below equilibrium. But the thing that you're forgetting is you have to have PD arrays lined up. You have to consider higher time frame down. So if you go from weekly, monthly, and daily, and you get everything you have on a monthly, weekly, and daily, you understand why prices drawn a little bit deeper than just this simple fair value gap, because you have multiple PD arrays lining up to why that would support it. So this move up here that we're seeing here has a lot to do with everything I just said here. But that's just my opinion, but that is the way I'm interpreting it. And then also notice that this is a breakaway gap right here. To me, there's two reasons why this stayed open. One, you have a balanced price range right here. So rally down, rally up. That makes it a balanced price range. Another reason why I believe that this was staying open is because we have S&P divergence. If you go down on the 4-hour chart, you'll see that S&P made a lower low here and actually went into its fair value gap, whereas NASDAQ left it open. And as a result, it sent it higher. And if you go down to a 4-hour and a 1-hour chart, you can see a lot of clean highs in here. So it's another reason why it, in fact, did stay open. So ultimately, that is the outlook on the daily chart, and then we also have to get up to this fair value gaps high. So that's the next draw. So we took it out this high actually tonight, but I believe that's the next draw on liquidity. And then after that, we have this candle's high, this candle's high, consequent encroachment of the wick, and then the high. But for now, I think the draw tomorrow, if we get animated, probably will fill in this fair value gap. 4-hour chart. I wanted to explain one last thing here. So we have a breaker here in this old price action. So we have a low The reason why I like this swing low violated, and that's the low and the high and the lower low, is because this is a swing low in the daily chart. So there's a little bit more of information there that I like. Versus low, high, lower low. Yeah, I like that. I like this better because it takes out daily sell side, daily buy side above this. Now we have support here with this breaker. So this is resistance broken. Now it's support. The only reason why that works for two reasons. Daily fair value gap. We have a 4-hour fair value gap right here. And then you take the breaker, carry it through, draw it out in time with this rectangle. Last up close candle, and you can see the consequent encroachment. Well, that's not correct. The mean threshold, because it's a breaker block, being respected here. And the bodies dig into it, but all of the bodies are staying above the mean threshold. Digs into it a little bit deeper in that, but it's only trying to get to the low of the daily fair value gap. And you can also notice that the bodies are closing about above midpoint of the daily fair value gap. So there's a bullish thing going on there, and then obviously we get a reaction there. A lot of sloppiness, but ultimately it has turned around after taking this sell side. Just dirty price action. And now I believe that we're going to reprice higher. I don't know if we're going to get trendy. I'm not too certain about this being a trendy market, but I do believe that we're going to see a lot of bullishness coming into this market. This could, another thing, this could come back down, retest this. I just feel like it won't do that because this is a balanced price range now, but it could come back down and retest this PD array, this inversion slash balanced price range, whatever you want to call it. I call it balanced price range, but I also can call it an inversion fair value gap. But preferably, if it's bullish and it's really bullish, I would like to see it stay continued. Like, I'd like to see it continue to reprice higher. Obviously, it's got to go down to a discount, to reprice higher. But that's what I want to see, is continuation up into all-time highs and just getting this market back on the road to new higher highs and stuff, because it's poised to happen eventually. We gotta go there. That's where I believe it's headed. Now, after that happens, then we have a whole different ballgame. But that's my outlook on NQ. And as I had mentioned earlier in the video, I was incorrect about it going below this low. I do see that as a breakaway gap, and now I think we're going to continue higher. So, that's all I got for you.